All right, friends, this is going to be a quick video. Upstart just crushed it for this quarter, but their guidance for Q1 is disastrous and the stock is halted after hours. When I first saw it, so you can see over here, the stock is halted. When I first saw it, I just saw the quarterly numbers, which was non-GAAP EPS of minus 25 cents, beat by 22 cents, which is massive. And then revenue of 146 million beat by 14 million. I thought the stock was halted because it was going to be up so much. But then you see their guidance, revenue of approximately $100 million. And this is so bad. Net income loss of approximately 145 million. Their net loss is going to be more than their revenue. That's not good. That's really bad. So you can see revenue of approximately 100 million in Q1. This is Seeking Alpha. The reason I have these up side by side is so you can see them side by side. Q1 EPS estimate minus 18 cents. Sure, got it. Revenue estimate for Q1 $156 million. They are missing their revenue. The revenue expectation, the estimate, by $56 million in Q1. Okay. This is just, it's painful for anybody that owns the stock. I don't own the stock. I don't plan to. This should just make you want to focus on high quality proven companies, right? Upstart was like the most exciting thing. I owned it for a little bit, embarrassingly, right? I got caught up in the hype. I'm trying to improve my investing process now and own higher quality companies. And if you learn anything through this channel, I hope that's what you learn is if 2020, 2021, 2022 taught you anything, I hope it was to get over the FOMO. And if, unproven or meme stocks rally, don't feel left out and don't feel pressured to buy them, right? That's what I'm learning, because sure, you might miss out on some temporary upside or something like that, but like just investing in unproven companies is just so hard to do, right? And if you do invest in them, then know the risk and keep the position size appropriate and something you're willing to just lose, right? Anyways, this is their report, and it just seems so disingenuous from their leadership team that they, despite the economic headwinds of 2022 and continued funding challenges that have impacted our financial results, we're a much better company than we were a year ago. We begin the new year with a more advanced technology, a faster AI model development, dramatically more training data, and a strengthened leadership team. We're on an important journey to reinvent credit so that it works for everyone, and we're excited to remind the world what Upstart is capable of. The quarter looked good. Yeah, the quarter looked fine. Total revenue was 147 million, a decrease of 52% from the fourth quarter of 21. Total fee revenue was 156 million, a decrease of 46% over the prior year. So the quarter looked fine, from what the current expectations were. Let's look at the stock compared to like some other similar stocks that you might own if you're interested in Upstart. This is Lending Club, Lending Tree, Bank of America, PayPal, and Block, right? They're not all great comparisons, but still. 3 years out, you're looking at a PE of Upstart of 12.75, way above Lending Club, about even with Lending Tree, above Bank of America, above PayPal, and below Square, right? Let's look at price to book, 1.83. Lending Club's at 0.92, Lending Tree's at 2.76, Bank of America's at 1.16, PayPal's above that, but again, not traditional bank, and so that comparison breaks down there. But the point is Upstart is more expensive than PayPal if you're comparing it on a PE basis, and then more expensive to something like a Bank of America or even Lending Club if you're comparing it price to book. Forward growth, yes, revenue growth is 45%, but that's going to actually come down because of that $100 million number that's not baked in here yet. So that's coming down a lot. This is the problem, though. So sure, their gross profit margin is great, But this is where it's going to really fall apart, is in their balance sheet, in their net income, which is going to come down, their cash from operations, which is just going to continue to be negative when you're looking at these other companies that actually have, somewhat of a more sustainable balance sheet and business altogether, right? And so we don't really need to talk much more about Upstart. I don't see any reason to own this stock. If you do, you're only owning it like for the hopes of some catalyst or turnaround or buyout or something. If this thing comes back to trading and it's like up massively, then I'm way wrong and I have no idea what I'm talking about. But I just don't see how this business is viable for very long, given what their Q1 guidance is going to be, and then what happens in a true recession, what happens for the rest of the year. I just can't own this stock. All right. If you like this video, subscribe to the channel. Check my newsletter out in the description. The link's in the description. I share my whole portfolio, all my transactions and everything with all my email subscribers. Also share that stuff on YouTube here, so make sure you subscribe to the channel. But it just comes directly to your inbox and you get all that stuff before I ever do it if you are an email subscriber. All right, have a great day. I'm going to cover Airbnb earnings, which I think were better, in the next video.